Hey guys, long time no see. It's been a while since I've done the video, so forgive me if I'm a little bit out of practice or if I stutter a little bit. It's what I'm gonna do is a new approach here. I'm thinking, you know what? I'm just gonna take you guys through. Not gonna do any prepping, but I'm gonna take you guys through to see how I look at charts. That way, not only will it be a little bit more learning for those of you that are interested, but also, you know, we'll go through it together. All right, same as before, a few months before. Let's start off with the main market. Been a while since we have recorded any videos, so first thing first, SPX. Messy chart. Let's clean this up a little bit. Let's see if there's anything I can clean up. So SPX new all-time high. I'm just gonna discuss it while I'm looking through the charts to see what I can clean up. Doesn't seem like there's much. Maybe this one. Anyways, SPX all-time highs. Congrats, market bulls. However, this is the kind of environment that you may notice as a little bit harder to find what to trade. Sorry guys, checking out the settings here. It's been some time since the last recording, so some things are a little bit off. Anyways, you know what? Let's adjust that on the next recording. So SPX, what are the targets that we're looking at? What's the forecast looking like? All right, so SPX, we have reached the 1-to-1 extension target from, if you were to draw from the last big move to the pullback. That gives us the 1-to-1 extension target of 4358.8. There, alternatively, the most recent move gives us a target of 4369.7. Both of these are the 1-to-1 extension target. There is a chance that we could reach the 1-to-1.618 extension target, meaning we'll be looking up at about 4,500-ish. From here, there is no significant divergences. As you can see from the last two divergences, first one being right here, there was a decent, not significant, but decent 5% drop. And then the second bearish divergence had a 3% drop. Right now, there is no divergences. So if we were to pull back, the pullback, I don't imagine it to be too strong. Generally, when you're looking at extension targets, I want you guys to know that there's usually two kinds of scenarios. There's one that you reject right on it. So if you were to look at this first target, we did, let's go to the 4 hours. If you look at the 4 hours, 1-to-1 extension target, we touched it and then we rejected right from it. Then we overshot it before the bigger rejection. So from what I've noticed generally on SPX or ES1, SPY, it tends to overshoot the 1-to-1 extension target before the rejection. So based on the volume, nothing really significant. There was a spike in bear volume on last Thursday. However, the dip was bought and it completely V-shaped, making new highs. On this new high, the 4 hours is a very slight bear divergence, but nothing too significant. And you can see from the volume here, the selling off volume followed by a huge bull volume. So this brings me to think that there is further upside, which we saw now, and that we're making new highs. Bull volume still outweighing bear volume. So no significant red flags on SPX. Use that 8R8 as your guide. The last time we lost it, we saw a drop, a further drop, follow through of 1.1% before V-shaping. So the first is always going to be the 30 minute, still in the bull favor, in the bull trend. Already still in bull trend. 4 hours still in bull trend. The bears had a chance to reverse into their favor on this drop by making a lower high, but they were unable to make a lower low. So from here, no significant trend lines that I can make a note of. One thing notable is this, the pandemic trend line, still here, this blue one. The pandemic trend line, we've been trading over it for the longest time. Lost it once back in March, and then wicked under it end of March, but now we are trading under it. So the momentum on SPX has slowed down, but no significant red flags yet. Second, let's look at NASDAQ, similar idea. Well, the chart is messy. Again, we're going to be going through these charts together, cleaning up together. Basically, you guys get to see what I look for, then compare it to your own. Do let me know if there is something that you notice and that I did not touch on. So I do see a zone here. Yeah, this makes sense. Right, so for the on NAS, for the last little while, we were in this wedge pattern. We were in this wedge pattern before all the big techs, majority of the big techs started breaking out. The big techs that have been going sideways, which included NVDA, Apple, Amazon, which are the tickers. We're going to go through most of those tickers today. And because this is the coming back video, just going to start it slow, don't want to burn myself out kind of thing. So we're going to limit it to about 15 tickers, excluding the market. All right, so first the NAS, it was in the wedge for a little while. There were two touches, two on the upper trend line, two touches on the lower trend line, but it started breaking bull, and now we're trading over the 1-to-1 extension target of the most recent move. From here, I would anticipate a pullback. Not saying it's going to be tomorrow or day after kind of thing, but do understand that there should be a pullback sometime in the future, sometime in the close future. This move on NAS has been 15.3% already over 42 trading days. So with that, we should be looking at least a higher low. The last higher low we found was 13,463. Now this is why people trade breakouts. If you look at this, the last breakout, there's multiple tops here, so it showed signs that it wasn't gonna make new highs. Then this new breakout is stalled for a little bit before V-shaping up, and then stalled for a little bit before continuation. So different scenarios. Volume, nothing significant. Potential, actually, I think there is a 4-hour bear divergence on this new high that was made today. 14,897 to 14,903, so slightly higher. There is a 4-hour bear divergence on NAS, so would anticipate if we were to begin seeing a pullback from here, we should see a lower low comparing to the last higher low. 14, oh, this was actually a lower low. Well, it depends how you look at it. I would anticipate a break of this 14,556. This is a must hold for the bulls. If this were to be broken, now let's draw a zone here. That's actually one of the easiest zones to spot. You know, support here, resistance here. So if this zone were to be broken, I would anticipate lower price actions to come, bringing us, if we're using the fibs, first the 0.382, which was the last all-time high rejection, around there, followed by the 0.5, which would be the previous all-time high rejection, around 13,909. So NAS, anticipate a little bit of a sector rotation out of NAS into other sectors when bear action begins to show up. We can see over the last few days, big spike in bear volume. Now there's a 4-hour bear divergence, potential for a daily bear divergence, decreasing bull volume as well. Yeah, I would actually anticipate today or tomorrow should tell us which direction it's going to go. If you're in bull play for NASDAQ, daily 8 is your guide. Daily 8, very simple. You look at this. Ever since the beginning of the move, we got over it, only lost it on that first higher low. Then bull flag, higher low, never lost it. Never closed under it, remember. When I say never lost it, it's always whether we closed under it or not. From there, still haven't closed under. It's just been, the daily is just been a straight shot. The 4 hours, you can see clear higher lows, higher high, higher low, higher high. So watch for a potential reversal here. I am in SQQQ for a swing over tonight. Let's see if it works out over the next 2 days. Next is the Dow. Nope, Russell's. Actually, let's go over the Dow first. Dow is about to make new all-time high, and this chart is messy as hell. Actually, I guess every single chart is messy as hell. It's been a while since I cleaned up my charts. Some of you can tell because it's been a while since I recorded videos. So now here's an example of what I mean. That it tends to overshoot the 1-to-1. If you look at this, you know, it overshot 1-to-1 before the pullback. Again, it overshot 1-to-1 extension target before the pullback. And this is why I say, you know, if you look at SPX right now, we're overshooting the 1-to-1 extension target. Depending on which one you look at, we are overshooting both of them. And RSI is showing a loss of momentum, pointing me to think that potential of a pullback coming up. Now, it may not be a huge pullback. So if you're watching or if you're reading Twitter or Reddit, you know, bear thesis guys are always going to be saying, oh, there's going to be a huge pullback coming. But whether that happens, it's to be seen. And in case you guys notice the difference on me, it's just I just turned the office light on. So, all right, on Dow, highest close ever. New all-time high close. Not all-time high price yet. Volume doesn't really justify the move, so do be aware that it could be a breakout, fake out of this trend line. This potential channel that I was tracking before, we can see rejection, and then another 3 rejections here, another rejection before breaking over, back test, and then now we are in new all-time high close. But new all-time high coming up 35 101. We are 90 points away. Volume doesn't really, if I were a bull on Dow, volume does not give me confidence. So there's two ways to play this. If you're not in right now, is not the time to be making an entry. I will wait for the new all-time high break on volume, seeing if there's increasing bull volume, then that would be an entry. Just ride the momentum up. If we break to new all-time high without volume, that there's a potential bear play there. So that's Dow. Next is Russell. Russell is actually this was a perfect play. This is an easy play over the last week or two. So I was tracking this wedge, long-term sideways wedge now, and potential of an inner wedge, but now there's a little bit of discretion. Anyway, so we saw a spinning top here on June 25th, my birthday. June 25th, I noticed that June 26th, the bear volume, increasing bear volume, bearish action. So enter TZA. This was an easy play. You know, you enter somewhere at the open of the day because spinning top reversal candle, bear volume, unable to break through over the wedge, and then from there we broke down, had a bounce. This trend line could potentially be redrawn. Anyways, so we had a bounce and then completely broke down onto this inner trend line, which is now redrawn onto that. It was over here before, so we didn't actually touch, but use the most recent actions. Anyways, so from there, we're seeing a bounce over key resistance, nothing significant, decent bull volume, not seeing a clear V shape yet. Today or Tuesday, tomorrow and the day after would be a telltale sign of whether if this is going to be a V shape. If not, I would anticipate a bounce. Let's see if it lines up with anything. Almost. Potential for overshoot of the GP, touch the lower part of the key zone before a rejection. So let's pay attention to Russell. I found it's one of the easier markets to use ETF to make money comparing to SPX and NAS. Russ, you know, this pattern has been very easy to play. Okay. Next, let's look at the leading indicators. Okay, I'm gonna have to speed this up a little bit. All right. Let's look at US dollars. So US dollars, we began taking entries for long position on US, meaning, you know, using Canadian dollar to buy US dollar somewhere. As we got close to, can't remember, it was either this wick or somewhere here, because we're tracking this trend line, which are now no longer valid. I'll be spending more time to draw the trend lines or the more recent trend lines over tomorrow's video. Probably gonna record a little bit earlier, but today it's not much time, and I don't see any clear trend lines here, to be honest. There could be one. Okay, that could work. So from the last low, US dollar, same as market, you know, we're losing momentum. Long-term trend line, we were trading over for the longest time until 2020 August. We lost it, and now we're trading under it. Now from the most recent low to, or not most recent, from the 2018 low to the most recent 2021 January low, we can see this is now the new trend line. and the most recent price action did bounce from there, and we are seeing a little bit of a trouble at the previous support area, which became resistance, and now it's becoming a resistance again. US dollar still would think bullish. We did just lose the daily 8. Now I'm going to be watching what the retracement looks like, where it's going to go to determine, use it potentially to determine where the market is going to go. US 10-year bond yield, very notable. We had this trend line ever since the beginning of the bullish action in August 2020. So you can see bounce, bounce, almost touch, and another bounce. This is no longer valid, and now we just wicked under it. Okay, maybe we just wicked from it. Okay, let's do that. Nope, still haven't lost it. Depending on how you draw it, you could say that it's been lost, you could say that it's not lost yet. But based on what I'm seeing here, it's very clear bear trend. Lower low, lower high, lower low, higher high, then continue to drop to make lower low. So with US 10-year bond, it's giving me a sense that, you know, depending on where this bounce goes to, I'm still thinking is relatively weak because of, it must not be this chart, because of what we have discussed in the last or recent videos. Oh yeah, this one. Okay, for those of you that have seen the previous videos, I did talk about this US 10-year over 2-year, which is one of the main thing I look at, but not on a non-frequent basis. And this is the reason why I anticipated the market, the pandemic crash. No particular reason, you know, saying that it's going to be pandemic, but did anticipate the market crash. Now, if we were to look at this, the US 10-year over 2-year, the last time the market crashed, so the last time that went sub 1, yeah, sub 1, meaning the US 10-year yield was lower than the US 2-year yield, generally used as indicator for market correction. Last time that happened, and then the market started rebounding, meaning bonds started rebounding. It took 917 days to rebound 1,285%. Okay, from sub 1 to, I don't know why they changed it to the line chart, to about 12. Anyways, so with the most recent one, it took a quarter of that, 257 trading days, to go from sub 1. You know, it's 100% less, but you get the idea. To go from sub 1 to the same area. And now we have triple topped. Let's take a look at the weekly, it might be easier. All right. So double top and multiple tops here. And that's why we're seeing a huge drop in the US 10-year over 2 years. All trend lines have been lost. When we looked at this, taking only a quarter of the time it took last time, it was a red flag for this, the US 10-year. US 10-year yield is showing that it was going to have a big drop relatively soon. Last video I made was somewhere in May. So if we were to look at the US 10-year, it has been on a complete bearish action ever since. Now finding support on the trend line. Anyway, so that's a little bit of a red flag on the market for me. Gold, congrats, gold, whoever played, whoever followed the play, chart is still there, you know, finding support on previous resistance and then bounce to the GP. Now look at this, finding support on previous resistance, bounce to almost the GP. This was an amazing play. Now gold, nothing particular that I'm looking at or sensing. Still potential channel, so there's overshot of a channel that's coming back, bouncing from GP. Now we're gonna see what's gonna happen here. Double trend line top. Yeah, if we're unable to break this area right here with even with this bull flag, I would anticipate further downward price action. Okay, let's get into the tickers. Running out of time here. First one, Amazon. So Amazon in new all-time highs, seeing a little bit of a stall inside bars, making a bull flag. So from here, I would anticipate over the next two to 3 months, we should see new highs on Amazon. Same with Apple, same with I don't know about Microsoft, NVDA, but majority of the big techs are in breakout mode. Oh, that's the other one. Okay, I just remember another one that I wanted to cover. Okay, so from here, give it another 2 days. I love what the consolidation volume is doing. Daily is in the overbought, near that overbought territory. Potential for a trend line, 1-to-1 extension target. Let's see where this, if this bull flag starts forming over the next 2-3 days, would anticipate another leg up, potentially forming a bearish divergence from there. But keep an eye out for Amazon next. And the other one to keep an eye out for is Apple. Blue skies haven't really closed over the previous high. Let's see, what is it closed? Closed over by 2 cents. And then today opened up with continued selling off throughout the day. Clear bearish action. Volume not really significant. From here, I would anticipate a bull flag formation unless we're seeing increasing bear volume. Then we would be looking for a pullback. And the pullback is going to determine what the following action looks like. What I was hoping for, when we were in this trade before, we got to the GP somewhere here. That's where we sold. I was looking for a back test of this trend line, but Apple was extremely bullish. So from here, let's see if we get a back test of this clear previous resistance, where there was 1, 2, 3, almost touch rejections around that 138 per share price. Let's see if we get the back test over there. Even if we do, that is still going to be around the 0.382, meaning the stock is going to be extremely bullish. So over the next little while, the main tickers I'm going to be keeping my eyes out for is Amazon, Apple, the big techs mainly. Microsoft is next. Been in the channel for quite a while. This channel began October 2020. We can see upper end, come back down, upper end, sideways, touch the trend line, the lower trend line, and then touch the upper trend line again. So very clear channel that's been ongoing. Right now we are at that upper channel, seeing a little bit of bearish action. The chart does need a higher low. So right now would not be the time to buy, or I would not be buying it at this moment. I want to see what the retracement looks like. If we're to look at the previous high, it would somewhat line up with 0.5. Not really a zone there. $261. Previous high, 0.5 resistance. Makes sense. So right here would be ideal entry. If not, you could wait for the GP, which would be most ideal entry. GP lining up with the lower trend line at about 256. Next is NVDA. NVDA, crazy bullish action. Look at this. It's been a 168. Wait, no. Let's just look at the time. August. 8 to 9 months sideways action. And when it does break out bull, it is gonna go. We tried playing it. I think it was here. We tried playing it. Wait, April. Yeah, February or April. So we tried playing the breakout back then, but it ended up being a breakout fake out, and the actual breakout came recently in May. And look at this. This run has been 46%. I want to say it's more than that. There we go, 54%. And it has broken over all extension targets. Now from here, we're looking at making a higher low. Judging by the chart, judging by the volume, there is potential for a new all-time high, making a daily bearish divergence before the actual pullback. So if you are not in, wait for the higher low. If you are in and didn't get a chance to sell, wait for a potential new high or somewhere double top, somewhere along the line. Or if you're not in, okay, so if you're not in and you're looking for an entry, a back test of this, depending on how long this divergence take to play out, ideal entry could be somewhere around here. Most ideal, let's see, previous trend line. Most ideal could be right here, the 0.5. So $700 mark, 680, $700 mark right here. Following that, you could also do 2 entries. That's NVIDIA. The other one I'm looking at, or I want to see how this goes. So dip scalp on it today. Disney, huge volume wedge. Has been constant rejection. This upper trend line was key to watch. Today we opened above it and had a immediate, let's take a look here. Oh no, we opened right under it. Then bullish action went over it, immediate back test, and then started going. So Disney, judging by the bull volume, the bull price action, I don't anticipate a immediate backtest of this upper trend line. We did close over the gap, filled the gap, closed over it. Tomorrow, would anticipate further follow through. If not the case, then watch for a backtest over the next few days of this trend line. That would be the most ideal entry. Next is Wish. So those are the top 5, the hottest. What I would consider the hottest. All the big tech names. And next 2 are the requested tickers. So Wish, this has been the tricky ticker. It's we got in right on this break. Didn't write the whole thing, but it was somewhere around 60-70%. And from there, never lost at 88, and that was a clear entry to play. This was the trend line. We ended up being double top at the low end of the key zone, rejected from there, and then lost the trend line, and now bouncing from GP. However, bouncing on decreasing bull volume, still trading on the 88. It's not oversold. It's one of those tickers, I think that just have a core. You know, you gotta either keep an eye out for it all the time or have a core in it. If you look at GME or AMC, you know, pop, pop, pop. It's been 3 pops on GME, which is the first of the meme stocks to pop. Next was AMC, I think was right after it. Pop, pop, and then the third pop. So it had 3 pops. Same. So with Wish, what I'm thinking is potentially the same thing. One, we'll see if this is considered a second one, but the third one should be the bigger move. So keep an eye out for it. When people forget about it, that is when it's going to start moving. GP, however, if you're bullish, you want to hold the GP. If you're bearish, it doesn't actually give me any other clear entries. GP would be the clear entry or the clear stop. If the GP were to be lost, probably most ideal to be stopped out if you have a position in it, which I do. I'm looking at, you know, GP is my stop right now. Next is NSCI. TSX Venture, small cap. When these things move, they really move, hey? 88 is still the guide. Yeah, so bounce from 38, both leg bounce. So you could either use the 88 or the trend line, depending on how you want to do it. Trend line. Trend line doesn't seem as reliable. We did close under it twice. 88 would be the easiest. From this, you know, from here, where are we gonna go there? This could very well be a extended move. Aside from volume climax, there's no reason for exit yet. There is a decrease in volume, but with decreasing volume, it's not a reason for exit. The only reason why you would be exiting if you were in the long position is 2 scenarios. One, it does break under, close under the 88. Second, if you see a spike in volume, that would indicate volume climax. Okay, and the last but not least I want to cover would be BA. I don't know if you guys can see, we made a new window for the dog, or a step for the dog to look out the window. Anyways, so last but not least is BA. I'm thinking that this has potential for a really nice move. We did lose the GP of the most recent move. We are still holding this wedge. BA is not an easy stock to trade. We opened under the wedge, or actually we closed under the wedge and then opened, gap down open, but huge buying. Now if you look at the previous patterns, all of these wedges have been redrawn already too. So even with redrawing, you can still see it. This was the only okay one, 2 touches. I remember this. I remember this one that what we were tracking before was actually this trend line. So you can see that with this trend line, it did have a fake out breakdown. Yeah, the fake out breakdown before the actual bull move. Then if you look at the next one, had a fake out breakdown, another one, a third one. So you could argue, nope. Yeah, see, it's, BA loves to give fake out breakdowns before the actual move. Doesn't matter how you draw it, it's not gonna have a perfect trend line on the lower part. So fake out again, breakdown before the actual huge gap up and run. Same with over here, fake out breakdown before they move upwards. So That is what, 1, 2, 3. This could be another fake out breakdown before the actual breakout. So BA, I'm going to be keeping a very close eye on over the next 2 days. I want to see what the price action looks like. Today, I was thinking of making an entry today, but it was an indecision candle. So let's see if we touch that GP again. Easy stop. Ideally, I want to use this 230 as a stop, but knowing that it does do a lot of fake out breakdowns before the actual move up, it could fish you before breaking out. So the safest way to play this would be, if you're okay with that much room, entry would be around, first entry would be around 230, second entry would be around here, the low of here. Low, no follow through, that would make sense before actual breakout. So the stop, the most safest stop, if you're afraid of getting fished, bottom fished, it'd be under 219. All right, so that's it for today's video. Thank you guys for watching. Hope you guys enjoy the content. Please consider subscribing, and if you know anyone who's interested, make a recommendation, share the channel. Thank you for your support.